am here today with Jane Yarbrough with Community Bank here in Gulf Shores. And Jane is a mortgage banker who happens to specialize in resort markets and resort properties, specifically condos. So a lot of times I have buyers that come to me and they want to buy a second home or investment property in this area. And a lot of times it's a condo. And I always try to explain to them, like, if they're financing, it's a kind of a different animal. And
Yes.
I feel like I do a very terrible job. And so I wanted Jane to demystify condo financing, help us understand it a little bit better. So Jane, the first question I have for you, what are the challenges that we face or that you face in financing or loaning money on condos in a resort market?
Yes.
So what are some of those challenges?
Absolutely. And Heather, thank you so much for having me.
Yes.
But yeah, absolutely. So, you know, when I am talking to a first-time condo buyer, I always need to explain that not only am I qualifying the buyer themselves, but also the condominium project itself.
Okay.
And each condo is different. Each condo has a separate set of HOA documents. Each HOA operates as a business entity separate than any other condo down here. So yeah, so what I need to do is I need to dig deep into the HOA and obtain certain documents from the HOA to make sure that the condominium is warrantable.
Okay, warrantable. What do you mean by warrantable?
Yes, so a warrantable condo means that it is at Fannie Mae and Freddie Mac approved. And when I say Fannie Mae and Freddie Mac approved, I mean that's when you're getting that fixed rate mortgage. And
so like a 30-year mortgage,
like a 30-year mortgage,
20-year mortgage,
yes.
15-year mortgage. Okay,
yes,
where the interest rate is...
It's fixed for that length of time.
Okay,
yes.
Gotcha,
yes.
Gotcha, I gotcha. All right, so what are some of the documents? You mentioned documents from the HOA. So what are some of these documents that you have to get?
Pretty much on every Fannie Mae and Freddie Mac mortgage, I have to obtain a condo questionnaire. Okay. And a condo questionnaire is a plethora of questions that the HOA has to answer. And at times, I also need to obtain financials like the budget and sometimes the balance sheet. And I also need to obtain recorded declarations that are on, thankfully, our county website. So
condo docs, as I call them.
Yeah, condo docs. Exactly, exactly. And then another and very important document that we need to review is the master insurance policy itself.
So that would be the insurance for the
structure,
the building.
Yes,
okay,
absolutely.
Okay.
Yes.
All right. So you've done all this. You've gotten all the information. Talk to me about down payment.
Yeah, sure.
So what kind of down payment is expected when borrowing or buying somebody that's buying a condo?
Sure. Yeah. So 25% down is best. Not only does it simplify the actual condo review process, but it also helps ensure that the customer gets a better interest rate.
Yes. We like better interest rates.
Definitely.
Yes. So what happens if somebody calls you and says, I want to buy a condo, I'm going to put 20% down?
Sure. So at that point in time, it is very important to make sure that I have a lot of the condominium documents up front, because it does change the condo review process if it's going to be a second home mortgage.
Okay.
In the event that they want to put down less money, I also offer in-house portfolio loan products.
Okay. So in the event that the condo doesn't qualify, so you get all the documents, you go through the process, and Fannie Mae and Freddie Mac, who backs that conventional loan, says, no, we're not borrowing on this. Like, what happens then?
So at that point in time, that's when I would offer an option to do an in-house bank portfolio loan. And that is truly where my bank, Community Bank, is going to lend our deposit money to you as the customer. And we have very attractive terms. And the condo review process is much more simplified. We still do our due diligence, reach out to the HOA to cover both the lender and the buyer, just to make sure that everything does check out and make sure that there's no surprises. But we are going into that underwriting process just knowing that it is going to be a non-warrantable condo.
Okay. So let's say I've got a buyer that is only wanting to do a fixed rate, 30-year, 15-year, 20-year mortgage. What do we need to do on the front end?
Yes.
To make sure that, I'm showing them condos that fit that mold.
Right.
And that if they find one they like, we're going to get to the closing table.
So at that point in time, it's best to reach out to the local lender and let that lender know these are the condos that I'm going to be showing my buyer this weekend. Do you foresee any issues? Have you had any recent underwrites with this condominium? And in addition to that, it's also very helpful to have a knowledgeable realtor and cooperative HOA to help provide those documents to the lender on the front end.
Gotcha. Okay. So, all right. So here's another scenario. I have people that call me up and they want to do a VA or an FHA loan, which VA loans are a great product for somebody. So what does that look like for a borrower or buyer that wants to use those type of loan products?
Yeah, absolutely. So VA and FHA are specific to primary residence lending. So it needs to be their primary home.
So they can't be buying it as a second home.
They cannot buy it as a second home.
Or an investment.
It needs to be specifically for their primary.
Have to plan to live there.
Yes,
okay, gotcha.
Within 60 days from closing. So VA actually has an online database, as does FHA, with a list of the approved projects. Now, in the event that the condo is not on that VA approved list, the lender can actually provide documents directly to VA to try to get it approved.
Okay.
It is a more lengthy process, so it's best to let the lender know well in advance that, hey, I have a customer coming into town, they're looking at X condominium, and they want to use their VA entitlement. So that's when the lender can then submit appropriate documents to VA. Now, FHA is a little different. They also have a database, and it's a little more challenging to get that condo approved.
Okay. And so from the VA perspective, it's just like VA works, 100% financing. They don't require any down payment and so forth. Okay.
And that does depend on the veteran's entitlement as well.
Okay. I think that's all the questions I have. Is there any takeaways or anything else that you think would be worthy of throwing in?
I just think that it's best to, of course, have a buyer get pre-approved and to work with a local lender who understands the coastal resort market when it comes to condominium financing. And I feel like also it's best to have a backup plan. So when the condo is not warrantable, you have a banker or a broker that has another program that they can offer.
Okay. Like community, you've got the portfolio loan. Is that what you mean?
Yes, exactly.
So then I sometimes call those in-house loans.
Yeah, in-house loans.
Yeah.
Perfect description.
I thank you for your time, Jane.
Absolutely.
And if you have any further questions about financing, direct message me and I'll connect you with Jane or help you as best as I can.